The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Dell in Texas. Hey, Dell, what's going on?
Hey, Tom.
How you doing, man?
My call. Great.
Thanks for calling. Thanks for holding. Appreciate it.
I love your show. I just stumbled upon it probably, maybe a month ago.
And how'd you find us?
I found you on YouTube.
YouTube. That's a beautiful thing. Well, we appreciate you growling and prowling with us. Welcome to the Tiger family, man.
Wow.
I like it. Totally.
Now, Tom O'Brien.
Hi everyone, Basil Chapman sitting in for the vacationing Tom O'Brien. My pleasure to be here at TFNN. I host the Tiger Technicians Hour every weekday at 11 o'clock till noon Eastern Time. And my service here is the opening call. It is a daily, very comprehensive newsletter that goes out every morning by 8:35. You've got all the details. And so it's a pleasure to be here. Let's go straight to the market. The Dow is up. I've got the Dow in front of me. For those of you who are not used to my notations and my charts, here on the left you can see the daily Dow chart. In the middle is the weekly. On the right is the monthly. So let's go through this. The previous declining highs from the 18,016 top on the 8th of June, pulled back, ran up again, but it only went to 18,011, 5 points lower. Then it failed on that Thursday night. You remember bricks at night. The next day, Friday, kaboom, 600 points down. Then we go even further on the Monday. We go down to 17,063. So about 1,000 points. And then what happens? In 1, 2, 3, 4 sessions, right through to Friday, soars up, and what does it do? It's so fascinating the way markets work. Look at this declining trend line. It's only at about a 2-degree angle, and yet at 18,002, the Dow stopped dead yesterday and pulled back this morning. But look what's happened. This black line, the 9-period exponential moving average, it held. And that means that it gives you an opportunity to say, good, the strength that we saw, I use technical indicators like the slow stochastic, right here at 87%, over 80% always is very good. Holding above 80% is very good. In the 90s is excellent. And the MACD, the moving average convergence divergence, rallying. So this is a very nice turnaround. So for my subscribers this morning, we wanted to go long on the opening decline, and we did. So we're long the Dow again. And now we're looking to see, is this the move that has the potential to not just take at 18,002 or 18,011, but to spike above 18,016, because that sets up something very different. Why? Because all of a sudden, the 18,167 high from way back in April, the week of April the 22nd, becomes a target. Now I'm going to show you something very interesting. Just quickly about the Chapman wave before I run the numbers. If I can just go, this is the chart that I wanted to show you right here. In the Chapman wave, for those of you who are not used to it, what we look for is the most identifiable low bar. And from that low bar, we merely count each successively higher peak, expecting that on the fourth highest peak, peak D, I'll label it alphabetically, at the fourth highest peak, or wave 4, if you want to think of it that way, that's where other things can happen. But the objective is to get you to at least a D. And if you're looking at this 10-minute chart of the E-mini, look how many Ds there were starting from yesterday. You got D actually goes to an E back. This is right there at the close on the 30th, and it just goes on and on like this. That's the technique. And now what we're looking at, when I did Tom's show with Tommy this morning, we were looking at this double bottom and the technique that's used in the Chapman wave methodology to identify this has legs to go and retest the previous high, in this case from the low of 2065.75. That was at 11 o'clock. To the 278.50 high that was earlier on at 10 past 10, and it did that, and it's now gone to a leg E, and this is where you can expect some kind of hesitation as other things start to take. We'll follow it during the hour. So let's go on with the numbers. The weekly chart, because of the move today, is acting very well. It's holding above the 9-period moving average. The monthly chart is still in a buy mode. It's a buy signal. It will be a buy mode the moment it goes to 18,352 to a new all-time high. I'm expecting that. I'm not sure when, but we are anticipating that's going to happen. All right, let's go to the S&P, and now I'll just run the numbers. The S&P is up 8 at 2,097. The comp index is up 30 at 4853. The VIX index, really important, was up in the mid-16s to the high 16s this morning. I said it has to break under 1615. It has to get to the 15s. And at that point, there should be buying pressure in the market with stocks going higher. So far, that's what we've seen. Now we're going to continue. We're looking at gold. I want to look at the gold contract because it was acting superbly earlier on. It's pulled back a lot. And my contention was that gold might be just on some of the interest rate sensitive stocks, interest rates themselves. That's the bonds we'll look at in a moment. And gold, all the participants on the upside lately might now have a little bit of a breather if this market is going to go higher. So leg E, remember we're looking at Ds and Es in the Chapman wave for some kind of reversal. And the weekly chart is bumping into resistance right there. So I'm anticipating that over the couple of days, I would not be going short. I'm just thinking that gold could have a bit of a breather. It's at 1365 at a fabulous run. And 1331 would be the key support level. That's the 9-period moving average, and if it breaks that 1318, I'd say it's probably in a trading range. I'd usually put a kind of a rectangle formation here. Let's go on. We're going to look at, let me just get rid of that for a moment, and we're going to go on. We'll look at silver quickly here. Silver's doing the same thing. That's at peak D there. Probably today by the close, you will not go above 21.22. So I think this is a peak D. Here again, you could have a little bit of a pullback, just a breather. Now let's go to crude oil. Crude oil right now is trading up 68 cents at 47.28, held above the previous support. Now it's going to be really interesting because the weekly chart hasn't broken down, and for people that are actually looking at the crude oil as a short, I'm saying, I think it's going to go lower. But I don't, at this point, see it as a short, other than quick trades, because there should be some kind of buying pressure as long as it holds above 46 to 45 is the key support level. That's what I'm looking at this particular point. But certainly we're making lower lows and lower highs in the daily chart. Says, hey, be a little careful because certainly we could take out that 45.50 support. It's trading at 47.29 right now. I'd like to look at the USO. That's going to give me a better clue. The USO, now it's very interesting. Crude oil, the continuous contract has gone to a peak D in the weekly. The USO has only gone to a C. That suggests that there's still some residual strength there. Let's look at US. I'm looking at this is fascinating. Bonds. Look at this. For those of you who never looked at these charts before, when I show the charts, this is the continuous contract of bonds. I'm going to go to US.P because it takes me back, way back. This is the 30-year Treasury bond continuous contract. Look at the channel that it's been in. Now keep looking at this channel. I love this. I'm going to squeeze it, squeeze, 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 squeeze. This is an up channel. That is an up channel. The up channel starts in 1981, September of 1981, and that channel has gone on to this day. It's remained in an up channel. I've never seen a 30-year, 31-year channel. That is just so perfect. I'll be back. Basil Chapman sitting in for the one and only Tom O'Brien. The Dow is up 67, S&P is up 9. We'll be right back after these very important messages.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman sitting in for Tom O'Brien. Now, we're looking at this is the 30-year Treasury bond interest rate. 1981 was the all-time high to the current price. Well, actually, the price has changed. That was at 616, and we're now at 76. So this is almost a month later, and it's still going down. And this is an incredible thing. Makes the high back in September of 1981. It says 152, but this is a rolling contract. In other words, the price is not the chart is exactly right. The peaks and troughs are exactly right, but the price gets modified because it gets smoothed out with the different months. So let's call it, for argument's sake, $15.20. So 15.2% was the high. And for anyone who had got a mortgage at that particular time, we're paying 16, 17%. And now look what happens. It comes down very sharply, and then it starts a bounce, and it comes down into 1986, has a strong bounce, and then it starts this channel that it never broke. Every time it gets to the baseline, it runs to the upside. Every time it gets to the upside, it starts coming back down. And this is the rate. So in other words, this is the yield. And the yield at this particular time is at, let me just move this. The yield is at 21.52. The low is 21.06. And the last low was 22.26. Let me just double check. That was trough D. 2226 is still that. Okay, so we've made a lower low. So now we're getting to the area with these arch bands. See that H, lowercase h? This is the pattern that you keep looking for. How does it handle the left side low bar? And we're going to see if there's a higher close next week than 2226, sorry, next month, then rates are going to start moving higher. Just keep it as simple as that. Here we go. Get out of this, get back to opening it as a chart that we want to look at for the very next thing. So that's the yield. Now, what's really important is I'm going to show you something else about the what I call my triple yield chart that I show subscribers every week. This is the white, the black background. Let me just see. You can see it. Yep, you can see it very nicely. I'm looking at Tiger TV. You've got a lower low here in leg E to the downside in the 30-year yield. My contention is that you've got to be a bit careful at this point, because if I use both the Chapman wave methodology in leg E together with Elliott wave, this would be 1, 2, 3, 4. This is 5. At some point, you're going to get a pretty big bounce. Now, if you get a big bounce, let's say you have a huge bounce, and it goes back to what? 25? That was 3 weeks ago. We were at 25. So even within this context, as you can see from this chart, you can bounce around. In fact, I'm going to show you something that's really fascinating. The level that we were at just last week is a level we've been at in the yield many times before. Look, there it goes through. Let me see if I can get it all the way back here. I think there was one more time. Yep, there it is. So we were all the way back in 2009. We've been here. So there's nothing extraordinary about the yield other than it has gone to a lower low. That's number one. Number two is there's competition for lower lows in yields. That's my contention. There's always competition for everything. And now there's the competition to see who can have the lowest rate. They don't need to have it. They don't want to have it, but that's what's happening. So I think that yields could bounce, but I suspect that we've got lower yields to come still. And this is the 10-year, the brown one, and the cyan, the light blue, is the 5-year note. These are T-note and T-note. And one's at 1.3 and the other's at 9.6. That is all three are now at the lowest levels that they've been, and that's going to be very important to monitor. So I just wanted to take a moment here to give a kind of an overview of what I'm looking at. With these low yields, you would expect that housing would be doing very well right now. Well, housing's doing okay. Based on this chart, the high that was made in August of 2015 at 252.20 saw a decline down to the 180, I think it was 186, 184 level in February of 2016, had a very strong run up to peak ABC. Remember, we looked for Ds. So far, we've not got that D. It has stopped the arching formation. So it's very important. If the HGX, the Philadelphia Housing Sector Index, goes above 239.89, let's call it 240. If it goes into the 240s, housing sector will be improving. And if it stays down here and it's not able to, it says it's stuck. It's another sector that is not being benefited, which you would expect from lower interest rates. This chart above here went to a peak D, pulled back quite sharply. It is Wood, WOOD. It's the weekly chart of the iShares Global Timber and Forestry ETF. So enough with that. What I wanted to show you also is within the context of what I'm looking at, let me go back to that 10-minute chart that we were looking at, the E-mini, because chart formations repeat over and over again. Remember I said this is a resistance line, this is a peak E, and at this point you'd expect a little bit of a rest. Well, look what we've got. In fact, right now, without any of the technicals, the MACD, the stochastic, or anything like that, if there is a close below this 9-period moving average, I'm going to change this from a red plus sign to a down arrow. That doesn't mean we say we can't have another rally. It just says this particular phase is done. If there is another spike and it holds pretty well in this area of the 287s and then has a spike and goes to a higher high above 2092 in the E-mini, then I can say it's an alternate count. It could be a brand new A, it could be an F. There are a bunch of things that I could look at, but it's achieved everything that we look for. Look at that peak E, look at the decline. So, okay, let's get out of that, and I want to talk about the QQQs. Look at this. 1, 2, 3. The QQQ series is, where did it disappear? Oh, I put it on the wrong chart. QQQ, there it is. Within the context of markets, when you look at the QQQ, which had the sexiest of the stocks, although the Netflixes, FANG, it just said Facebook, Netflix, Amazon, it had Google, the works. Those stocks, Priceline, those stocks have been taking a bit of a breather. Some of them have now gone to new all-time highs. But the QQQ is going to be a really big clue. Why? Because if the Q is at 108.01, up 59 cents, if they are able to push above not this high that was made 3 days ago at 108.48, but above that high, the high of the 23rd of June at 108.79, you've got a change of pattern here that says that the V-shaped pattern that we're looking at that came down right here, let me show you, it's just a real simple technique. That pattern could in fact move using a price, what I call the left side, right side price time match. Let me show you what it looks like here. If you look at this chart right here, ESU 16. We used that technique right there. That's what I call the plumb line right there. You went up and down in the same time frame. I used it over here, going up. So all it says is that from a low to a high, you could make the same distance to the downside in the same time period. Look at this big one right here. That's one of the biggest ones you could see. Look at this. I'll squeeze it close and you'll see what I'm talking about. This is really quite a remarkable one. We were on air when we were talking about it, 2081, all the way to the midpoint here of 2104.75. And look, you come all the way down to the E-mini, back again to the 2082 level, and then you do a different pattern. But look what happened. It went up and down in the same, from 4 o'clock back on the 1st of July, all the way to 4 o'clock just about on the 5th. Hey, it's a long time for a 10-minute chart. I'll be back. Basil Chapman. The Dow's up 42. S&P's giving a little bit back. It's still up 6, though. And we'll talk about what I'm expecting going forward. Come on, see.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited-time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I'm sitting in for Tom O'Brien, and we're looking at, remember, for those who just tuned in, the left side is the daily, the weekly is in the middle, monthly is on the right. These are the charts. It's the same stock in different time frames. Could even put in the 120 minutes if I wanted to. So this is what we're looking. Tesla comment in the den. Dave White, who does just fabulous technical work, says, Chanos warning on Tesla. Well, he's been short Tesla for some time. It has, you know, he's an amazing short. wouldn't call him a player because he's really a positioner. And for years, decades, in fact, he's been able to identify stocks, companies, and say that they're just not going to work out. They're going to go to zero or something. And he has the patience and the money to sit there until they actually do that. So I've been looking at Tesla, and I commented that I believe that 291.42, that was way back in September of 2014, that there could be a hat-trick top. What I call a hat-trick top is when my daily gives a sell signal, the weekly gives a sell signal, the sell signal in the daily goes to a sell mode, the sell signal in the weekly goes to a sell mode, and then finally you get the sell signal in the monthly, and that suggests that it's not just a sell-off of just a short-term duration. It is really serious. It's going to be months, 6 months or more. Well, look at this. We have not gone. We've tried to test at 291.42. The next bounce in July of 2015, a year later, was at 286.65, and it failed by 5 points, but it failed. Then it came down to my rule of this H pattern, which is the inverse. This is the U pattern, the double top pattern, says that if you take out by 1/3 from the lip to the base at any point, if you close below that 1/3, you're going to go at least half. If you go under half, you're going all the way back to the low. That's what it did. And then the rule of thumb is you could even have a 1-to-1 to the downside. Well, it's not quite a 1-to-1, but it certainly went from 291 to 141, which means it was cut in half. And then it had a really good rally, and that rally went back up to 269.34. This is Tesla. Now, if around here I see a lot of Teslas, people just seem to, they're buying them, okay? Really, they're very, very good-looking cars. I happen to think that for the innovation of the battery and everything, they're not as innovative-looking as they should be. That's just my own personal opinion. However, when we're looking at the chart is suggesting that there are two levels to watch. It'll be successful in having a very strong bounce to the 240s if it can close above 222, and it's at 214 right now, because that's a trend line resistance. But if at any point Tesla starts to close under 200, that weekly chart, the 9-period exponential moving average, says it's barely closed last week above, but ever since it broke down in the week of the 6th of May, it has not been able to close above the 9-period exponential moving average. The MACD and the stochastic are not very good. The monthly chart stochastics are not very good. I'm kind of in agreement about it going down. I don't know about it going broke or anything like that. I think later on, with the competition that we're seeing, I think Tesla does have a very good chance of having serious problems, and they're way behind in the numbers. You know, they talk about this is Elon Musk, who's originally from South Africa. I'm originally from South Africa, and so I've followed his career fairly closely. But he has a way of milking this company for money, but doing different things. So I'm saying, wait a minute, give me sales. I don't want all this other stuff with people signing up for getting the car in X number of years or whatever it is. And the chart is saying it's got its work cut out, because if Tesla is unable to climb, and my theory here is that if the stock market goes to all-time highs, people will spend money and they'll be buying Teslas. It's as simple as that. They'll be buying, as you see right now, they're buying the best of the best. The BMWs, the works. There's just a lot on the road. Mercedes, the works. So that's what I'm looking at. All right, enough with Tesla. I'm giving you the parameters. Above 222, could go to the 240 level, and under 200, be real careful. All right, that's that. Now, the other thing that was mentioned was Mitch in Boston said CTA, a stock I followed for a long time. We've never really owned it. I'm not sure even why we don't own it, because it's been a stock that's a harbinger of the economy in many ways. It is Cintas core, overalls, clothing, rentals, and if ever there's going to be an indication on how things are, hey, this stock seems to be telling us. And it's saying that it's done a beautiful job of rallying. It's got a whole series of peak Ds that recycle, went again, and now it's in another leg D, and you've got this trend line resistance, which is coming in the monthly chart at about 103, and the stock's at 99, so 4 points higher. Does that say that we could rally for a little while longer? I'm inclined to think that this is a very strong move. It's a very, this last 4 days, 5 days is just an extremely good, strong, and there's no other way I can count. Well, I suppose I could count it as an F instead of an A, but it really looks quite solid. It looks like it's holding. It wasn't bothered at all at any of the pullbacks this week. It's just gone straight up. So I do like Cintas, and would I buy it now? Oh, if I didn't buy it before, I'd be more nervous now than about buying it. But it has a technique that I call the Chapman Wave cup and ladle. It's not the cup and handle. Cup and handle, you stop at the previous left side lip, and you struggle, and you make a little handle, and then you break out, and invariably you come back and test it. No, the cup and ladle is where you have a price, a left side, right side price time match. Usually you have a match. In this case, you go from there to that bar, that particular doji type of candle, and you pull it up, and now you got the right side, and the right side will make green. See where that goes, and that fits right in there. Yep, there it is. Exactly. And then it broke out in leg D, and this cup and ladle says, not only will you go to a D, you could go to an E, but what's really important about this, it has upside momentum and power. Look at that. That's not even a handle. It didn't even have time for the handle. It just went straight up there. So I like it, and I think that it might be a little bit overbought short term. But if this is leg A, it's going much higher, and so is the general market. But if this is going to be an alternate count F, you've got to be real careful. But the stochastic is at 98. Remember, I was saying in the 90s is very good. Well, this is 98. Think of this as the inverse. Think of it as 2% on the downside when it was going down. That would be horribly negative. So this is the exact opposite. It's very positive. This is a nice looking. Thank you, Mitch, for pointing it out. And this is, as I say, I think this is part of some kind of an economic recovery, looking at it right there. All right, so that's Cintas. And there were a couple of other things that I thought I'd look at. We're about to go to a break. And before we go to the break, let's look at that E-mini contract that we were looking at a little earlier on with a peak E and see if it is giving us any hint of a closing spike to the upside. Holding the 9-period moving average, have dipped under it, but it hasn't broken it yet. Still going to call this leg E. And now what's really important about this is if it takes out that what was former support, 2085.75. So remember, what were the techniques repeat over and over again? Remember, I just spoke about the technique of the Chapman Wave cup and ladle. And this is it. This is the one that went smash right through the left side high of 2.85.7. Says you're going to probably go to at least a D. Well, you went to the D, you even went to an E, but it's already had a very strong sideways consolidation and is holding the 9-period moving average. And now let's see if we can get a clue from the VIX index, VIX.X, the 10-minute chart. And look at that. Remember what I was talking about, the left side, the plumb line, how it can go up in the same time as it went down? Look at this. The VIX went up, came down, tested almost exactly in price and time. Hey, I'll be back. Basil Chapman, Dow's at 58. Be right back after these important messages.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Hi, everyone. Basil Chapman sitting in for Tom O'Brien. Remember, I do the Tiger Technicians Hour at 11 o'clock straight after you hear Tom and Tommy do their show early in the morning. I did help out because Tom's away on vacation this morning. I helped with Tommy. I shouldn't say helped. He pretty much ran the show. Did great job. And, of course, he was educated by the master, so we expect that. And I'll be doing that again tomorrow. So, yeah. We're looking forward to it. Now, this is the VIX index, and the VIX ran up. Remember peak Ds we were talking about? There's a little group. I'll circle them right here so that if you want to look at them later, you can look at them. There's a set from the trough, identifiable trough, peak A, B, C, D. This is the volatility index 10-minute chart. Then it comes back down. Then it goes again. A, B, C, D, pulls back. Goes A, B, C, D, pulls back. Then another one, A, B, C, D. 4 peaks at 1704. That's the final one. And now on the way down, it's had a trough D and then another trough D. And now it's in a leg E to the downside. Not only has it gone into the low 16s and the high 15s, now it's at 1515. As the market is moving up at 74.82. So this is suggesting that we could go back to the mid-14s by tomorrow if everything works out. And let's look at the ESU 16 as we're about to go into the last 15 minutes. Now, is this a recycle? This is where it's difficult in the Chapman methodology. You've got yourself a D and an E. Is this an F and then we're going to pull back? Or is this recycled? So that's the difficulty. But there are techniques that can really help you. And some of the techniques have to do with real simple things. You see this trend line right here? This trend line says, okay, you don't have to make a decision right now. This is where it's resistance. But if you were long, it behooves you at this particular point to start taking some money off. You can even get out. And often what happens at 10 minutes to 4 o'clock in the afternoon, that's when the futures, if they've been very quietly holding into the up until 20 minutes before the bell, sometimes that's where the futures can really suddenly get a big kick as people say, oh my God, this is just not going down, I have to buy. And they spiral right into past like 4:10, 10 minutes past the bell in the afternoon, they're still moving higher. So that's your big risk. Your risk is that you get out here at 2009 and we've still got another 6 or so points to go to the upside as it wants to test one of the previous highs. Now this I spoke about this earlier today in the 10 o'clock hour, or maybe it was 11 o'clock. This is a very important level of 2076.50. It goes back. I'll squeeze this E-mini. You see, ops too much. It goes back to this whole area where it made a head and shoulders in the Dow, when it went to that peak D, that left side, right side price movement. Oh, there was another shaft, This is what I call propeller shaft, where this is the fulcrum, goes 1-to-1 to the upside. So that's another technique we'd use from there to there. So a lot of things are going on. So that makes this level here both a magnet and a potential repellent area. So let's see what happens. Day is young. I always say, even with 15 minutes to go, anything can happen. So here, let me just do a couple of things, because we're about to go into the final period of the session, the last 15-minute live period, and then you get the futures that continue, and the market itself stalls, and everything comes to a halt, basically. But I wanted to show you a couple of things. The IBB has had a very strong move. Yes, it's been pounded from the 400.79 high in July of 2015, and it came all the way down to 240. I think it's still going to 220 to 200, something in that area. But this is a very important bounce because of that pattern. You remember the H pattern? This is a little complex. I'm going to make it simple here. This whole thing is really just one arch formation. And that arch formation, I'll make it in a different color so that you can really see it, so that I can also use it at other times when I'm doing the show. Give it a weighting, a little bit more weight. Give it a different color. What color? Blue. That blue always works. Yep, blue's very strong. So this is a weighting. We're going to add that. I'm going to go to blue. Now you look. You've got that lowercase h pattern. See, straight down. There's the H, and that says there was a pretty successful test of the 240.03 low of the week of the 12th of February. And it ran from there all the way to 287, was it? 289.71 on the week of the 22nd of April, before it came back down. And then it came back down and held, even though it's only 27 cents higher. This is called, in the chart wave methodology, a successful test of the H pattern. If it breaks, it's called the dreaded H. But at 2040s 30, so now you've got yourself the chance for a nice rally back up into the 280s, and then we make an H that goes to a lowercase m pattern. And then it comes back down again. That's my thinking. So there's still a little room on this side. Now, this is going to be very important. The volatility index. I always spend a lot of time for my subscribers. Every day I give them parameters to look for. Let me show you what I do. Yeah, right here. I've already started tomorrow's work. Let's not do that. Let's go there. All right, here it is. And this is what I do. I show this quintile. I like to say these 5 quadrants. This is the Dow 120-minute chart. This is the volatility index 120-minute chart. This is the Richard Arms Trin index, short-term trading index. And this is the Dow. This is a bar chart of the Dow. And this is a daily bar chart of the S&P. And I give an overview in market today. And within this, it says, over 1640s, the market slides. Under 15, market rallies. So every day within all this, I've given you support levels. I've given you things to look for that are really important, little snippets of information. So it's a very comprehensive, and this goes every day. I spend hours putting the whole thing. I've spent more time sometimes in the whole day's trading, just trying to get it right for the next day. Not always right, but that's what I try to do. So within that context, let me say that the volatility index, remember this A pattern that I put up here? You might see that this is going to have what I call the Eiffel Tower, where it goes straight up like that and then straight down. And it can do it in the same time frame. So what happens in the 14s is going to be really important, because if it breaks that, you're going to go test the 12. What was the low there? 1272 back on the 7th of June. And this market is going to move sharply to the upside if that happens. I'm suspecting that there is still strength in the Dow, still strength in the S&P. The Qs have just come online. They've just been, finally, there's a little bit of a decent action there. They're actually up 0.71%, a better percentage than the Dow and the S&P. And the IWM, we need things in sync. The IWM is only up 0.05. It's the laggard in this crowd, 113.75. Hasn't broken down in the weekly chart. It did break down in the monthly, and it needs 120. It's at 113.73. It really needs 120 to say, you know what? All systems are go. We are going much higher. So those are the parameters I'm looking at. If it takes at 113.73, it just needs to close under 109, and it says, whoops, be careful, that 200-period moving average at 106.87 is likely to be hit. At this point, it's good action, but not great. How about those PPH? This is the pharmaceuticals. PPH is the Van Eck Vector Pharmaceuticals. Look at that nice move. Now, I've done all this, and I haven't looked at gold. So gold at this point, I spoke about it in the very beginning, but I'll do it again. Gold is acting extremely well, but I'm suspecting that it's bumping into some resistance on the weekly chart. It's in leg E. I don't have anything technically to say that it's negative until I get into the very short term. And then I say, hey, a PD? And pulling back. So we'll follow up on that in the final segment of this particular hour. Hey, this is Basil Chapman, host of the Tiger Technicians Hour every day and the Opening Call newsletter. I'll be right back. I'm sitting in for Tom O'Brien.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his Opening Call newsletter. Right now, you can get a 2-week free trial to the Opening Call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back, and we're looking at the S&P E-minis up 7.50. We're looking at this. I've put a down arrow with the peak F. Even if it goes in this bar higher, it's still leg F. It hasn't actually made. I'm anticipating. Usually, you shouldn't do that. And normally, if one is in the E-minis at this particular point, and you've managed to pick somewhere near the low, this is the time that a lot of sessions, the market closes at the highs and it goes into the 4 o'clock to 4:10, 4:15 period. So we'll watch this closely. So the pattern that I like to suggest here is that if you've got, if you're in it and you've got a day trade, I would be taking something off and let the rest ride. And you can have a stop. It's at 291.75. You could have a stop of 20. Well, just this low bar, the bar that it's in, 2089.50, and that's simple. The rest gets that stop. Because if it starts to take out that, it's going to pull back. My thinking is it's going to run into the close. So probably there's a little premature to put the down arrow in. Let me take it away because it's still the leg. You got to be faithful to your technique. So I'm thinking that it's going to test. You see that strong resistance? Remember the strong resistance we were looking at in gold? Well, not this one here. It's this one here. In gold that where did it just, oh, it's right here. That I said that kind of resistance that goes back a long way, you got to watch out because sometimes that could just be a sticking point and it says, okay, I need a little time to get through that. I'm in what I call the Chapman wave inside track repellent zone. That's gold weekly chart. Let's go back to this and we'll look at it going into the close. Yep, there it is, going to the last at 352 is where you start to see the action that takes you into the close of the day. So, okay. Now, as we're doing this, I'm going to just suggest a couple of things because in the next hour we're at the close and we'll do the wrap-up show, the hour coming up between 4 o'clock and 5 o'clock. So let me just do those for those of you who won't be able to listen. Let me just base it on, if you look at the volatility index, the VIX is at 1512. If tomorrow, let's just say there's some news overnight in the markets now down 3.5 to 5 points in the S&Ps, and we open up and there's no news to help, this volatility index is worth watching because if it starts to rally into the high 15s, and at any point in the next 2 days, if it goes into the high 16s, this market just starts coming back. Make it real simple. Now you can use the SPY. You can use this is the SPY, the green 5-minute SPY, and the USO, the crude oil, as a guide. I just treat it only as a guide because sometimes they separate and you get stuck. But most of the time they tend to, not the price percentage, but the direction is kind of in the same, they go in the same direction. So a couple of things that I wanted to add. And remember, so as I say, when our subscribers went long this morning, the Dow now that's a nice candle at 17,923. I'm hoping that finally we can just push through and go towards the 18,351. I want to see a new high, and then other things are going to happen. It's going to be very important. Let's go back to in the remaining minute or so. Okay, so now we've extended beyond the resistance level. And that says that going into the close, there's a chance. Remember what I said? We were down at, 2091. And I said, you want to be, if you've got a couple of contracts, you want to be able to stay in at least one, and you got to tighten up your stop on the other. But the real objective is that you want to be able to see if in the closing session, there's a rush to be covering or buying or something like that. So you've taken your profits off, you're going to let this one run, and you just raise the stop, and then you can make your stop anywhere. Now, this is at 3:58 in the afternoon. It should actually have been running stronger than this, so maybe this is it. Maybe this is the move. So if you have got these, I just get out right now. You've had a fantastic profit. You can start tomorrow fresh. This is Basil Chapman. We just followed a nice little 10-minute chart in the E-minis, a little study lesson there. Hope it was worth it. And I will be back straight after this for the next hour. Stay tuned. And thank you for being here.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Asim in Dallas.
Hi, Tom. I love your show.
Thank you so
I've been
much.
listening to you since 2001 from my Seattle days when you were on a little station there.
I appreciate you growling and prowling with us out here, man. Thank you. Well, listen, thanks for bringing us from Seattle to Dallas, man. Appreciate it.
Yeah, I love all the hosts. I love your show. I'm addicted to it.
It's Hotel California. It's wicked, isn't it, man? Thanks.
All right, Tom. Nice to talk to you.
Have a great one. Have a safe one.
Now, Tom O'Brien.
Hi, folks. Basil Chapman sitting in for Tom O'Brien, the vacationing Tom O'Brien, well-deserved break, and it's my pleasure to be here. Usually I do the Tiger Technicians Hour, 11 o'clock till noon Eastern Time, every day, every market day, that is. And I have the opening call as a daily newsletter, a very comprehensive newsletter, goes out every morning. So at about 6:30, I send charts out to my site, and by 8:35, the Traders Corner has gone out, and that's with all our positions and a little summation of everything that I've done, plus individual stocks or indexes that we might be long or short, as well as stocks that or ETFs that I put in every day, just to give parameters on what we're looking at. So the Dow closed up 78. Let's do this one at a time. For those of you the first time seeing my charts, there's a notation on it, letters on them, but you can just look at the charts themselves. This is the daily chart right here. This is the weekly Dow, and this is the monthly. And what's really important about it is that reversal today above the 17,781 9-period moving average, that little black line there, was really important and very strong. It's good action because the technicals, the way I look at it, this is called the MACD, the moving average convergence divergence. Nice strong move to the upside. The stochastic is in the 87% level. I love that. And that means that what happens from here on in is going to impact the weekly chart. And this weekly chart has this big W formation, but took too much time on the right. So it's got a different implication. The implication is that you've gone to a peak C, and in the Chapman wave, you like to look at 4 higher peaks. That's what's really important about it. So that would go to leg D only if it goes above 18,167. That was the high in April. That'll start leg D. And there's a little Brexit thing. You don't even know that there was a Brexit the other day, last week. And the monthly chart still remains on a buy signal, but will only go to a buy mode, meaning I'm expecting 4 higher peaks. If you can see the Dow go above 18,351, the all-time high made last May. All right, now we can do the numbers a lot quicker. S&P, SPX.X, that is the S&P 500. Needs to break above, I didn't give the parameters on the downside. So for the Dow, at this point, going to the 18,000 area will be really good. 18,020 is even better. And the support has to be down to the 17,820 level. I'm talking near term over the next 2 days. The S&P was at 2,099, up 11. The S&P needs to break this downtrend line, because unless it can surmount that and then close nicely above it, it's not going to be able to tackle the high it was on the 2113 level on the 23rd of June, or the most recent April high back on April the 8th of 2120. So far, good action. The technicals are also very strong, and it moves me to say that 282 to 275 should be a very good containment area for any weakness. But if it's able to close tomorrow, not intraday, I want to see it actually close tomorrow above the high that was made on the 1st, above 210871, that'll be really nice action. Leg D starts in the weekly above 212055. Monthly chart still looks very good. Like the Dow, it's in a buy signal, not yet a confirmed buy mode. All right, let's do the QQQs. The QQQs at 108.26 needs to break on a short-term basis above 108.48. Very important to get there. And then the weekly chart improves. This is kind of lagging, like the IWM. Today the Qs were up 85 cents. That's very nice at 108.27. I want to see the 109.80s, the 110s, and I want to see it soon. The laggard has been the IWM, and that IWM at 113.91 up 22 needs a lot of work. It needs to get to the 116s, 117s to show real strength. Gold has been on an absolute tear, but I think it's just on a short term, it's going to be pulling back here, while the interest rate sensitive stocks and interest rates themselves tend to have a little bit of a pullback here. That's the way I'm looking at it. And what's really important is that this is still very strong technically, in the price, but the stochastic's only at 78 in the daily. But the weekly chart is bumped into resistance. See this green line here? This is what I call the chap wave inside track repellent zone. It needs decisively to get, if gold can get it, 1366, if it's able to get into the 1388, 1392 level, that'll be a really important breakout. At this point, I think it's just going to consolidate maybe 25, 35 points down. Could even do more. It could even test the 1330, 1318 area. But so far, it's been really strong. So let's go. We've got silver right now. Silver is at, made a peak D. It's at 20.17. I think it too could consolidate. Crude oil could have a bit more of a bounce. Bounce today. Doesn't look great, but I don't think it's going to break down just yet. So at 47.36, if it's able to get to the 49s by Friday afternoon, that'll be important. My thinking is it's going to chop around here, make maybe a lower low, a slightly lower low. But I don't think it's going to tank just yet. Tank of gas, as they say. Now, let's go to bonds. The TLT Lehman 20-year T-bond fund is at 142.54, up 21 cents. And this is what I'm saying. Based on my 120-minute chart, based on a number of factors, I think that is a spectacular move. I don't have time now to do it. Maybe later in the show I'll do it again. I showed the 35-year bull market in T-bonds and a 35-year bear market in yields. But in the meantime, back at the ranch, I think it's a little toppy. It's still, the Japanization of our bond yields is going to continue for quite a while. But I think on a short-term basis, you can start to see them pull back. Yields go a little bit higher. And if I look at the dollar DXY, we've got the dollar. It was holding well. It's kind of stuck in this upper range. If gold does pull back, then gold can, the dollar could, in fact, if the gold pulls back, the dollar could get to the 96.80, 97.20 area. If it does that, that's going to be very important for the monthly chart. But in the meantime, back at the ranch, just do one thing at a time. The weekly chart is what needs to see somewhere in the 97s, and that'll start to strengthen a little bit more. So the key support is at 95.25 for the dollar. And I'm missing one thing here. Oh, EUR USD. That's what I want to look at. And that is the euro-dollar currency pair. It's trying to rally. It's just kind of stuck. That monthly chart looks like it's got the H pattern that goes to an M pattern. I drew it up there. That's the pattern we're looking at. And this weekly chart has this large arch formation. Really important for the euro-dollar currency pair at 1.11 to try to get above 1.112. If it can do that, it'll say, okay, good, a little bit more strength. But at this point, I think the dollar is the currency of choice at this particular point. So that's it. And then the VIX index, I'm going to add right here because I do a lot of work for my subscribers on the VIX index. What I said is if the VIX stays in the high 16s, watch out, triple-digit down move. If it starts to break under 16, there could be a reversal that takes the Dow to the high of the day. And thank goodness we got that. And this VIX index is making the pattern I call the Eiffel Tower, straight up and straight down like an uppercase A. So if the VIX starts tomorrow to trade in the 1460s or lower, this market's going much higher. So I think that's covered a bunch of things. And we will be back. Basil Chapman sitting in for the vacationing Tom O'Brien. Dow was up 78. S&P was up 11. I'll be right back after these important messages.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. Basil Chapman sitting in for the one and only Tom O'Brien. And I have someone special right here in the waiting room, and he's about to come on, and it is John Logan. John Logan, how are you?
Basil, good to hear your voice as usual.
Well, it's great to hear you. And before we do anything else, tell us what you present here at TFNN so that the listeners can be aware of exactly what you do, all the work.
Yeah, every morning from 8 to 9, run a little show called the Global Market Pulse. I think we have a pretty good time every morning trying to cover things to be aware of before the general stock market's going to open. We usually try to cover a couple of global indices, the notes, sometimes the bonds, the golds of the world, the coppers, some of the currencies, and obviously the S&Ps. And then we end up doing some stock plays during the latter part of the hour. And I always stay tuned for the rest of after the show to catch your show, by the way. It's one of my favorite shows on TFNN.
Well, I appreciate that. And one of the things that it's a mutual pat on the back we've got there, because the way that you've developed these lines of support, resistance, the way you've got, you call them DMZs. I love looking at that. I love the fact that it gives very specific levels to watch, and it makes it a lot easier because it's like when I'm looking at my peak A, peak B, I'm expecting C and D, and that gives you the trend. And this is the same with you. It holds the support. You're looking for a break to the upside, or if it doesn't, you're looking for a break to the downside. I love that.
Yeah, it helps me keep my sanity, and I hope it does that for some other folks too who watch it. We've got this scanner that basically delivers the meat of it on almost 5,000 different instruments across the globe, and that covers, I think, 19 major indices, all the internals of those indices, the futures markets, the forex markets. It's just loaded up. But a lot of things I talk about in the morning, Basil, are really kind of baked into that product. And I appreciate you saying that, because I use your information to get the confirm on some of the things I'm looking at. So when I see you talking about the same thing as I'm thinking about, it makes me feel better about, going in that direction, put it that way.
I tell you what is interesting, because here at TFN, I've been here for a very long time, maybe 12, 13 years. And what I think Tom has put together is a package of hosts that have tremendous experience and almost to a person, I think each one has a teaching ability so that people who listen are able to glean some information that they probably would not get elsewhere. And that, I think, is the huge resource. So when I listen to you, I say, wow, people just don't appreciate. I mean, I know what's gone into all that work. I don't think people can appreciate the hours and hours and hours of, and especially when you give it to programmers. I don't want to say anything bad about programmers, but I know from my own experience that if you ask a programmer to do something, they get involved in something they think is so important, and you look around and say, wait, I didn't want that. All I wanted was, you know.
Right. Right. No, I totally agree. And you know, you're so well prepared, and it shows when you do your show. And I love to get the insight. You know, as you talk about it on a day-to-day basis, and like you said, a lot of the people out there, they don't know what goes into this, and you're just a great example of that statement.
All right, now that we're finished patting ourselves on the back, let's get down to the nitty-gritty so people can say, hey, wait. What do we buy or do we sell? You know what I mean? So let me ask you something. With today's action, I'm sure you were following most of it throughout the day. What struck you as the most important thing that you will be following tomorrow based on what you saw today?
Well, a couple of things. One of the things, you know, I've been just trying to lean on the long side on the notes and the treasuries until we're told differently. You kind of have to do that, as you know. And you know, I've been looking at the 10-year. We had a profile appear below the 10-year on the intermediate on the daily, which means you've got a balanced area that's pretty far below price action. That's usually very bullish. And in the midst of, you know, the Brexit rally that happened and us kind of eclipsing those highs or getting right up to them right now, I've been using, you know, the 240-minute profiles to kind of, you know, allow this thing to provide support and also provide breakouts. I'm kind of blocking out the short side still on the treasuries. So that it was interesting how we barely came off the highs off the treasuries today and found support and rallied up a little bit again on the 10-year. And, you know, the U.S. stock market, I'm going to pull this up, Basil, because we're talking about what do you look at tomorrow. It was really, this is really a scary chart for the shorts here. And it's that way because when we came down into this 2064 neighborhood today, and I was a little hesitant on, you know, backing up the truck and really buying the S&Ps today at that level. I'm showing it on the screen right now. But we talked about it before on the show from 8 to 9 today. And we talked about it yesterday. When you get to these major inflection points on these indices and you're looking at the internals, and we've got a breadth calculation in the scanner. I'm going to pull this up. And I said, look, if these long-term weekly breaths and the daily breaths stay positive, you almost have to kind of blindly, you know, say, look, the broad market and the internals are still positive. We've got to pull back into support at 2064. You've got to buy it.
Correct. Yes.
I wasn't super excited about, you know, again, backing the truck up and getting super long at that area, but this kind of provided that framework where, you know, it wasn't okay to really be short down here. It was okay to be long, and, you know, henceforth we've had a 30-point S&P rally. I wasn't expecting that kind of rally today off the bottom, but so that's pretty powerful. I'll talk about tomorrow. And Basil, what I do in this case is I try to find stocks that are strong. The market looks like it's kind of compressing up, and trying to ignore, you know, any type of bad news out there, seemingly. And I go into the scanner and I just find breakout opportunities here. I just hit a special little custom key, and it puts some things on the board that I can be aware of to look at tomorrow to provide places to play defense on the long side. And if I want to trade some stocks that are relatively weak, I'll go in here and look at breakdowns so I can play defense on these stocks from the short side. So I'm trying to buy strong stocks right now and sell weak stocks.
So in essence, what you're looking at is you've got a market perspective, but the scanner itself is saying to you, within that context, there are strong stocks. There's a group of strong stocks. That's what you really want to be participating in. And there's a group of weak stocks, so that you could, in fact, have you could be buying the index, but at the same time, we have the same thing. We have shorts and longs right now because I think it's a split market. And you've got sectors. And I'm looking at sectors and I'm saying, okay, there's a chance that the interest rate sector right now is getting a little bit toppy. And I'm watching that. That doesn't mean to say short. It just means they've had a spectacular run. Like a Procter & Gamble, some of these stocks that are in the defensive area.
Right.
And I'm just saying, hey, it's a little unusual, and I'm watching them closely. But I think you're absolutely right. And if you look at the scanner, of course, it's got the XLU's been strong, the XLV, just that's beautiful, right? And it's interesting because it's got the staples, XLP. And that XLP is telling us a little bit more about the economy, wouldn't you say?
Without question.
So I do appreciate you coming on, and I just advise everyone, I'm going to talk about it when we're gone. I'm going to be talking about your show. It's so important. 8 o'clock in the morning, I think people have to listen to it. It just gives a wonderful overview. Thank you so much, John.
Thank you,
appreciate it.
Thanks for having me.
Thank you very much.
Okay.
So, folks, we'll be back. Basil Chapman sitting in for Tom.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman sitting in for Tom O'Brien, and the Dow is up 78 at 70,918, S&P up 11 at 2,099. I was just talking with John Logan. So John has, he gives you a global perspective every morning starting at 8 o'clock Eastern Time. And we have shows going all the way through on a Tuesday and Thursday. They go through until 6 o'clock because Andy Hecht finishes us off. And Monday, Wednesday, and Friday, we finish at 5 with Tom O'Brien. But what's really important is that to get that early morning perspective, to be able to that international perspective. What has happened overnight? What is going on? When John talks about this, it's with years of experience and trading experience and knowledge, and it's very important, I think, for a cogent, cohesive thought process to be the start of your day, and that's what he gives. So I really, and the program, the software program is fabulous. So I do want to say thank you so much to John. He's added a great deal here at TFNN. And I also want to just show, he's spoken about the XLU, the utility index, S&P, a select utility spider fund for ages. Look at this beautiful move here. Just the last move alone, just from May, where it hit, was in the 47s. Today it's at 52.98. It hit a high of 53.02. I think it's just a little toppy, but these are not shorts. This is for adding 2 positions. But in the meantime, it's a fantastic move that it's just had. And so let's look at a couple of other things here. I wanted to talk about, I believe I did in the last hour. I'm going to go back. This is the PPH, which the PPH is the market vector pharmacy ETF. And what's really important about it is that it's had a basing area in the weekly chart that's just gone on for a long time. It's got that H pattern that I like to talk about. It's got a second H pattern. It went to a lower low, but it did close above the high that was the low of 55.69. Oh, did it? No, I think it didn't. 55.02. Okay, so this acceleration up right now is really important because it could trigger a new buy signal that goes to a buy mode very quickly. And at 59, this is something to look at because you don't have to own a particular pharmaceutical. Look, Merck has done very nicely lately. MRK. Here we go. Merck, look at that strong leg that it just had. Look at the weekly chart, leg D, monthly chart. I didn't think Merck would actually go from the low, from 63 down to 46, and then rally back to 59 as strongly as it did so quickly. This is good action. So I'm looking at this and I'm saying part of what we're looking at here is a rotational correction that has gone into some areas but not others. So within that context, Merck is actually looking pretty good. Let's go to our caller in Chicago. Robert, how are you?
I'm very good, Basil. How are you?
I'm well, thank you.
So you just mentioned Procter & Gamble, and I wondered if you could maybe talk about what is your view on Procter & Gamble?
It's the most unusual chart formation that I've seen in a number of these. These are defensive stocks. These are the Procter Healthcare, the food stocks. They're the stocks that most fund managers will gravitate to when they are unsure of what's going on in the market. And yet at the same time, this move that just started from the 81 area in Procter & Gamble, PG is the symbol, and it runs from 81 within a week and a half. It goes to yesterday's high of 85.50. Oops, no, yesterday was 85.95. So you've had a 4-point move, a 5% move just in a week, and it's trading at 85.03, down 41 cents. I like it as a part of a portfolio. I think the weekly chart has improved a lot. What I was saying a little earlier and what I had said to John and what I said earlier in the day during my show is that I think that the defensive stocks, if I'm correct, that there's going to be a rally here that might surprise people and push them back into the former darling NASDAQ stocks and to some of the darling Dow stocks, then I think that Procter & Gamble could hold well. Now, I think you have Procter & Gamble, right? You would be adding to it or no?
Yeah, I would be adding to it.
Okay. So here's my thinking. You got your core position. It's at 85.03. I'm not sure you will get a chance. I hope you do get a chance. But before it gets to 86, just a little bit above here, point above, I would prefer if it pulled back, and I would like it to pull back just a little. And I'd like to see it get to the 84.30 to the 83.80 area. And that's where I would recommend you add a small position to what you have now. Give it about a week, because if the other sectors take preference, then this could pull back a little bit more. It could take a little more time to digest these gains. But I do like it And I think as part of your portfolio, as an add-on, I would buy it in that, what did I say, low 84 area, upper 83s. And I tell you what I would also do. In this position, I'd give it about a 2-point stop. In other words, at about 82, if it comes down and starts to test the 82 level, I'll say, you know what, maybe just keep the core position and let's wait, because if high tech suddenly becomes popular again in this move, if it's another big move to the upside, then you might find that this is a sector that becomes the laggards just for a little while as they rotate. We've seen this over and over since the summer of 2010. When there's a correction, it turns into a rotational correction. We've had 122% correction altogether, and the rest have been relatively mild. You were going to say?
So, Basil, I was speaking with a friend of mine who actually owned Nike. And recently, I guess this year, I don't follow Nike at all. Nike did a split. It went from, I don't know exactly where it went through, and I found that intriguing because Procter in 1996 got up to around $115 or $120 and then split. In other words, I think the philosophy that Procter had at the time, or may still have, is when it gets up to a certain over $100 stock, investors like me or whatever don't want to buy it at $100 or $120.
Correct.
And,
yes.
So I'm asking you, and I don't know, can you project Procter going to 97? Can you see it going to 115, or that's just not possible?
First of all, that's a really, really good point that you just brought up. A lot of people have just forgotten about that completely because it hasn't happened for a while. We haven't seen some of these big stocks splitting for ages, right? So that whole concept of the board of directors have it in their minds that when it gets to a certain level, they start talking split. We haven't, thank you for bringing it up. I mean, that's a great concept to have. And what I love is when I do my charting and I look at a chart and I look back and all of a sudden I can see somewhere there's a D floating way up above and I say, oh, they must have split because I've still got a letter left over from that high. So in this particular instance, I would just suggest to you that hopefully you're right about the 100 and something price, and this Procter goes to that 100 price and then it starts to split. But as it stands right now, this is a retracement mode. So I'm saying to you, yes, I would add to it. Did you say Nike or Nike Sports NKE, the symbol? What was the stock that you?
Yeah, I thought NKE split sometime this year.
Yes, correct. I had to redo the letters. And in fact, Nike, oh, you know what? This is an interesting stock. Can you hold on? We'll talk about it as soon as we get back.
Sure, not a problem. Thanks, Basil.
Great. Folks, we've got Robert in Chicago. We're talking about Procter & Gamble. We're talking about Nike at 55.80. It's up 60. The Dow was up 78 today at 17,918. I'll be right back. Tom O'Brien Show, Basil Chapman sitting in.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Hi, everyone. Basil Chapman sitting in for Tom O'Brien. And the Dow was up 78 and the S&P was up 11. We're looking at Nike, NKE, Nike Inc., sports apparel, etc. This is the B stock trading at 55.80, up 60 cents today. But it took a real beating. It's gone from 68.19 down to the most recent lows in the 51s. And I had spoken about this on my show. In fact, for my subscribers, we almost went short Nike. But I found that these stocks, because fund managers are still vested in this area, and they still believe in stocks like this, that sometimes they can have sudden deep spikes to the upside before they get way back and go down below the 9-period moving average like this weekly chart shows. So I'm looking at Nike, and I remember, yes, it's had splits, but at this particular point, I'm looking at Nike as a stock that needs a lot more time to reformulate, to find other venues or avenues of growth. That's the way the chart is looking. Now, can it have a bounce, even a decent arch formation up from the 55 to the 59, 61 area? I suspect, yes, it certainly could. And if it's ever going to do it, the technicals that have improved over the last week or two in the daily chart and the last week and a half, just up until today, from last week, the low that was made, says, yeah, you could play this one as a bounce, and hopefully it becomes something much bigger than a bounce and more an intermediate term buy. But my monthly chart is the one that makes me real hesitant. So when I'm looking at it, we're looking at two different categories. We're looking at two different stock patterns. And the only thing I can say about it is that the concept that you brought up, that whoever it is, the board, the CEO, it doesn't matter, that when a certain stock historically has gone to a certain price, that it starts to look at as a split is a favorable thing to do. I've completely forgot about that, and I think that you're right about Procter & Gamble. Hopefully it does go into the low hundreds before it has that split. That'll be a good sign, because it means that's what they're waiting for. Nike, I think, is a little different. I'm looking at this. I have a negative bias towards Nike, even if on the short term it could pop about 2.5 points. I just wanted to do that. Once I looked at the Nike stock, I wanted to talk about that, and there's very strong resistance in the 57s. And I know you like to look at positioning yourself and adding, because you are not worried about minor pullbacks. You're looking at the bigger picture. My bigger picture for Nike says, whoops, they've got a little bit of work to do here before I get positive on Nike.
Do you have time for one more?
You give me the name?
Whole Foods Market.
Oh,
WFM.
I thought you'd be bringing that up. I can't remember now if I'd actually, oops, I typed it onto the chart. Let me do that right now. WFM, folks,
so Basil, on a longer term view of that, what I have done with this before, I've bought it at 30, and it's popped up to 35, 36. It's come back down and taken me right out. That's not what I'm looking for here. I wouldn't mind entering if I thought this thing might go towards 42, but I don't want to buy it at 33 and move it out at 35.
I must tell you that I have two Whole Foods just right within a mile and a half of me, and I often go to different ones. I like to look around, see what they've got. They are the one supermarket that I think works its floor like no one does. They try this, they try that. They're always there's something very positive about their not being. They're relentlessly inquisitive on how to better their how can I put it? Let's call it just the profit margin. They are really quite relentless, and I've noticed that they're leaning a little bit more towards, it's you can call it organic, but they're also leaning towards, you've got a lot of products there that are quite fattening, to put it simply. They're very tasty and very fattening, although I happen to find that their bakery is not quite as good as some of the bakeries that really put the stuff that you're not supposed to eat in. But in the meantime, the chart is saying that there's been a tremendous, it's like they've spent a year, it's exactly a year, in a consolidation fashion. This would be the first time that I would say to you, if you want to just start a position in Whole Foods here at 33.60, knowing that it hasn't quite finished its work, but with a chance that if it takes from 33 and goes to 36, it goes to the 36s in July. If it's August, it's probably getting too late. It's got to use it. It's got to use this month as a springboard. If it can break all this resistance, you might find that you are into a stock that gives you a really good intermediate term rally, even though it's not quite what it was price-wise, because it only goes from 33 to, say, 37 or 38 or 40. But that's still a nice intermediate-term type move, and this might be right now the moment you can do it, and I would definitely have at 33, I'd have a 31.75 stop, $1 and something. I'd make it fairly tight. Why? Because this is the move. This is a base. Look at if you can see my weekly chart, you'll see this beautiful cup formation. All it needs is to have a close above 35.58, the high that was made the week of June the 10th. And now you're in free zone. Now you're looking at 38.70 as the 200-period moving average that it hasn't even seen since it broke down back in, I think it was the beginning of February. Let me just pull this back. Yeah, that's right. It broke down in May. In May, it broke down that 200-period exponential moving average. This would be the first time. So I'm just saying, I know that you are prepared sometimes to start a position where there is that longer-term outlook, and this is the pattern that says, oh, we could just keep hanging around, just chopping up and down, a point and a half up, point and a half down. But if it does move higher, this coming into next Wednesday, a week from today, I think it could take out that high of 35.58, and if it does that, that'll be positive. That's the kind of thing I'd be looking at for you. But, it's just, all I'm saying is it has the potential to be a more intermediate-term move if it can take out all the resistance that it's had for months, and that's in the 35. So if it gets to 36, that's nice action. I hope that helps you.
That's a trade. Thank you, Basil. Have a good day.
Thank you very much for calling. Robert in Chicago, we were looking at Procter & Gamble. We went to Nike. We went to Whole Foods at 33.16, up 85 cents. Legs seen the Chapman wave. I think it's improving quite a bit, and it's definitely got resistance up there in the 35s. But I am saying that this is that. Look at that. Look at the consolidation that it's had, and it has the cup formation. The left side keeps making lower lows and lows, and then the lower lows become shorter in duration. And shorter in length from the previous one, and now it's making higher highs and higher lows. I think that's a nice pattern for the potential for a move, a more kind of intermediate term move. All right, that's enough with Whole Foods. We're done there, and what I want you to do is this. Let's go to Verizon. I want you to look at some of the kind of dividend plays. See, Verizon made a peak E today. It could have been recycling. But I'm looking at stocks like a Verizon, like a Telephone, like made a peak D today, Telephone, looking at something like a Clorox. These are all in the defensive yield type area. And all of a sudden, look at this red candle in Clorox, down $1.03 at 138.21, having made an intraday and an all-time high of 140.47. So the technicals in the weekly and the monthly are still very strong. I'm saying maybe we've got a little bit of a consolidation coming up in the yield type stocks. We'll see. I'll be back, folks. Basil Chapman sitting in for Tom O'Brien. Dow is up 78 at 17,918. S&P up 11 at 2099. Be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Hi, folks. Before we wrap up for this final segment, let me do a couple of reviews as we're looking at this right now. You got the Dow. Look at this. This is the 3 charts. You got the daily right there, the big W formation that took a little bit of a kind of a, we can call that even like a cup and handle, call that a handle. In the weekly chart, the huge W that's still very positive above the 9-period exponential moving average. In the monthly chart, that changes completely with a close any month below 17,500. You've got to start being careful. But in the meantime, we're at 17,918 on the Dow. I contend that this resistance is going to be the big thing to crack at 18,000, between 17,990 and 18,020. That's key. Let me show you a chart right now, the 2 charts. This is what I show my subscribers every day, my daily newsletter. I give a long discussion on what's going on in the Dow, or the Dow and the daily chart, and the 120-minute chart, and the weekly and monthly. I do over the weekend. I discuss where we are and what we're doing. But in the meantime, look, there's a larger V. I've got another one here with a smaller V. And that V-shaped pattern, the Chapman wave left side, right side, says that by the 9th, by the 8th, in fact, that's on Friday, by Friday, there should be a test of at least 18,002 to 18,011, but 18,016 is really the target price. If there is a close above it, I have to call that new leg B if it happens above 18,002. That's very positive for the Dow. It's one of the reasons why I wanted my subscribers to go long this morning on the decline. Didn't want to miss out on that. And if you're looking even at the 120-minute chart, let me move this away here. The 120-minute chart says, okay, nice. It's exactly what you had drawn in this morning, the cup formation. We didn't quite touch that 200-period moving average support at 17,705. We did go to 17,713. Now that says in the cup formation, there should be a move sometime tomorrow by early afternoon that tests 18,002. Now, what happens if there's a failure? What happens if the volatility index, trading at 14.96 right now, actually jumps to $15.63, anywhere above that, right? My contention is that you got to watch out because 17,867 is the 9-period moving average support on the 120-minute chart. Let me make it clear. The Dow intraday tomorrow, if it takes out 17,840, that's 50 points lower. That's a negative. And that's going to suggest that you could be doing some more backing and filling before you're even able to go even higher than this, the high today, because you need time and you need some buying pressure, and that would be the VIX going lower. If in fact there's the fill of the gap right now, and the Dow gets above the gap, which is at 17,938, it's called a 939, by tomorrow morning at 10 past 10. That's going to be good. And if there is buying pressure, I think we could get, in fact, a test of the 18,000 to 18,020 level by Friday. That would be I think that'd be very good. Where else can people put money? That's the big question right now. It's a big deal because the yields are just so low. So people are going to the yield type stocks. I think people are going to now they've gone back. I've got my Dow Quartet. We've just got time for that. That's GE. Look at the lovely action in GE. Very nice. IBM, my 4 horsemen. Nice action today. Not great, but nice. Up 69 cents. IBM at 152 needs to get into the 154s. That'll be really good. Triple M. Trading at Triple M, not 2 M's, Triple M, trading it down 47 cents. 175.16. I think that if Triple M is able to go to 176 to a new all-time high, just needs another point and it's an all-time high, that's going to be very positive for the market. And UTX, G is my pilot light, and UTX is more my intermediate term. This is the one that's kind of stuck. So if UTX at 101 is able to even trade into the 102s, that's a positive. And that makes tomorrow's action on Wednesday, and Friday, very important for the weekly chart, because this is the week that I want to see a move to the upside. Hey, thanks so much for being there. Check out my opening call. I think you'll find it really interesting, hopefully profitable. And I will be back for my show tomorrow. And thank you for being here. Basil Chapman, sitting in for the one and only Tom O'Brien. Have a